Cryptocurrencies make news. They are popular yet very controversial. My guest today is Garrick Hileman, head of research at Bitcoin. He is an advocate of cryptocurrencies. Countries like India are looking to ban cryptocurrencies. In that context, what are the challenges ahead for advocates like him? We find out.
There's a wide range of responses we see across the world. So I think it's not fair to say that governments as a whole have been very negative on cryptocurrency. There's actually been a number of governments and regulators that have taken a very positive, more open-minded, constructive approach than not. Actually, I recently wrote a post regulators where some of the unsung heroes in many markets and this around the story of cryptocurrencies rise over the last 10 years. And, even in markets where the government has maybe been more aggressive at regulating or policing cryptocurrency activity, for example, China, they still have created space for the largest mining sector in the world. Over 50% of Bitcoin is mined in China, despite various crackdowns on trading and media activities. So very few countries have really come down and tried to prohibit completely cryptocurrency. A small handful of small countries, Bolivia, Ecuador, and not very many others. So I think in many countries, governments understandably have been confronted with a very complex and new technology that is disruptive, and it's a challenging technology to develop the right policy framework around. And so it's not surprising to see some variation across jurisdictions and how they've responded.
In one of your papers, I noticed, one on stable coins, which you published about a year ago, and I went through the summary of it. And there you have quoted a gentleman from International Settlement where he asks Bitcoin players to stop trying to create money. Now, obviously, I mean, there's something being challenged by the technology, right? And
yes.
That's why they feel threatened.
No, I think absolutely. And you've seen not just governments, but, people in the top of the financial services food chain, Jamie Dimon, Warren Buffett, make some rather nasty comments about cryptocurrency and Bitcoin specifically. And I think whenever you are sitting atop the hierarchy, the pyramid, so to speak, it's natural to maybe react negatively to a new challenger that may threaten your existing way of operating, doing business, and what have you. And, I use the example of, a taxi driver. You wouldn't expect a taxi driver to celebrate the arrival of Uber in his local market, especially if you've made a huge investment. In all fairness to the taxi driver, I mean, there's been oftentimes a very significant investment of time and resources and real trade-offs to become a taxi driver. So I don't want to, in some way sound like I'm diminishing the reaction of incumbents. I think incumbents understandably can sometimes react negatively, but we have to find the right balance between kind of protecting the status quo and maybe disrupting things too quickly, and also innovating and building a more efficient and better kind of economic system and model.
But is it just the issue of challenging, the currency regulation? It is also probably you're challenging the sovereign, right? I mean, currencies are a sort of, they sort of wield a power. I mean, every country would have to have a sovereign right over it. Now, when you bring in a system like this, where you have a currency which is determined, whose acceptance is determined based on the receiver's acceptance, we are going back practically to something that people did in the olden days of barter, right? Where you accepted something in return for goods and services, which was acceptable to the guy who was selling something to you. So So countries are, they are obviously they are not resisting technology or disruption, but they are certainly concerned about the fact that they are losing power here. Is that something you think is what is bothering them?
Well, yes, is the short answer. But I think, if you look at the bill, the draft bill on, banning cryptocurrency, that term cryptocurrency is being used less and less by many regulators. For example, the former Bank of England governor, Mark Carney, quite prominently dropped the term cryptocurrency and embraced the word crypto asset, as have, a number of people in other central banks, in recognition of the fact that instruments like Bitcoin are not used as much as a currency as much as they are an asset. And they're regulated in the United States, for example, by the Commodities Futures and Trading Commission, which regulates other commodities. So, the terminology is another big challenge. And this is something I've also talked about and spent, quite a bit of time trying to develop taxonomies that we can all agree on to define precisely what it is we're talking about, and also find descriptions and terms that match how things are being used. So I think one reason regulators have gotten more comfortable with Bitcoin and maybe are less comfortable with something like Facebook's Libra project is because Bitcoin represents an asset more than a currency, whereas Libra really clearly is designed to play more in the wheelhouse of central banks and payments and areas that are deemed to be more sensitive from a systemic risk, financial stability, and monetary policy perspective, not to mention money laundering and other kind of more law enforcement issues.
And it's pretty interesting that in different jurisdictions, countries tend to put it under different laws. So, for example, I read that in Switzerland, it's under some money laundering rules. It's regulated under money laundering rules. Now, that is a big issue in many countries, money laundering, and that fear is something that probably gives sleepless nights to central banks around the world. Um, how is it that as an advocate you would convince a government in India, which is basically battling an economy, a parallel economy of sorts, which in India we call it a black economy, which is absolutely the size of the real GDP that exists in the country. So how do you convince regulators in India that okay, this is something that is disruptive, but it's not threatening?
Right. So the data we have shows that over time, cryptocurrency, as a percentage of its total use, is the amount of use going to black market or illegitimate activities has been shrinking down to 10% roughly in the case of Bitcoin, according to estimates by chain analytics firms that track online dark webs. Now, the aggregate size of activity hasn't necessarily shrunk. You still may be looking at tens, if not hundreds of millions of dollars in annual illegal activity used. But what's happened is similar to the case of the internet, which started off, used for things like pornography or other objectionable or illegal activities. You saw the share of internet use grow more and more towards legitimate, less controversial use cases compared to its early days. And we've seen the same thing with cryptocurrency. And now, like I mentioned, 90% of activity roughly is more around investment and saving and helping to boost technology investment, new investment in new technical infrastructure, and playing an important educational role, interestingly, as well. This is something that doesn't get talked about as much, but a lot of young people around the world, have not taken as much interest in finance as maybe they should. And cryptocurrency has gained a lot of appeal to this younger generation, and in the process has helped many of them become more financially literate. Sometimes that's a painful process. You may learn some hard lessons along the way if you get a little exuberant. We've anyone who's invested has probably had some losses they can remember And certainly that's been true in cryptocurrency, sometimes spectacularly. But there's a number of real benefits that, in my view, far outweigh the negatives. And I expect that trend to continue, given all the positive use cases, especially that we see in times like coronavirus and around this pandemic. That's something else we could talk more about in detail as well.
And we saw obviously the value of cryptocurrency surge during the post the pandemic in as it exploded all over the world. We saw the value of cryptocurrencies really surging in the past few weeks. I mean, it did dip at the start of the lockdowns which were enforced around the world, but then it has bounced back significantly from there. What do you make of it? Is it just the popularity, or it's just that the convenience of cryptocurrencies is being realized by individuals?
Right. So, usually there's more than one reason behind, these stories. I think certainly cryptocurrency is a beneficiary of the ongoing digitization phenomenon, which has been accelerated by COVID-19. People spending more time online, people using digital payments more. That was already happening before the pandemic, and that's been accelerated. We've seen also a burst of interest in investment activity in the stock market in many countries. I think that's had some flow over benefits to some knock-on benefits for cryptocurrency. I think we've seen in Bitcoin's case, it's one of its primary use cases is its scarcity and its status as a virtual hard asset. It's kind of funny to refer to Bitcoin as a hard asset when it's virtual. We wrote a blog post on this. The hardest asset in history is ironically virtual, but it's scarcer than gold, which is often proven attractive during times of economic disruption and uncertainty about financial stability. That's, I think maybe the biggest story, and why we've seen some major investors like Paul Tudor Jones, legendary hedge fund manager, come out and take a very significant position in Bitcoin a few months back. So there's a whole variety of reasons. We also see the rise of stable coins, which are another interesting phenomenon. They've been one of the biggest winners since the coronavirus pandemic outbreak. And that's also another kind of like fascinating story, and the ability to earn interest on these stable coins if you deposit them on lending platforms, as well as earn interest on your Bitcoin. That's another growing market that's giving people a real return just for holding something that historically did not generate any kind of yield.
So can we then say that these are now crypto assets that anybody can own, and not like a currency which is in circulation, which can be used as a sort of a replacement for a national currency? I mean, these are crypto assets and not cryptocurrencies. Can we say that now going forward?
I think they're both, and that again doesn't help with the confusion. But if you want to say what are they used predominantly for, they're used as an asset, no question about it. And so if you had to pick one term, a term that accurately or more accurately reflects their current use, crypto asset is a better fit than cryptocurrency. But there are people who are making payments with cryptocurrencies. And especially, I think we'll see more payments made with stable coins, which are designed to, not fluctuate as wildly as Bitcoin. Although interestingly, Bitcoin has been called the new stable coin. Its price has been flat for almost 3 months here. So its volatility is approaching that of my local currency, the British pound. And that's quite interesting. I think one of the things that people assume is that Bitcoin will always be more volatile than a managed national currency. And perhaps that's true, but during long stretches, 3, sometimes 6 months even, we've seen it quite flat and be quite stable. But I think we'll see more uses of stable coins, especially when you think about new products that could link a stable coin to an interest earning platform where you're making 3, 4, 5, 6, 7, or even 10% interest annually on a fiat national currency that's then also tied to, say, a debit card. that you can use in your mobile wallet or in a physical form. That kind of three-legged product, I think, could be quite compelling for people who don't have any interest in kind of the story of cryptocurrency, just purely from a financial value perspective. Could be quite attractive, and so that's, I think, going to drive more use of payments.
One of the things about the current financial system is that it creates money and is led by capitalism. Now, it is broken to a large extent, but it is the only system we got. And now we are trying to say that distributed ledger technology would kind of lead to some new developments where do you see it kind of indulging into equitable distribution of wealth, or and it will take away privileges of a few people and open opportunities for everyone, or it would remain a fiefdom of a few people around
Yeah,
the world?
that's a really great question, and I'm glad you asked that. It's one of the reasons I'm particularly excited about the possibilities around crypto assets and blockchain technology. So in a number of ways, they offer a very interesting way to kind of level the playing field, and I think make the financial system fairer and more equitable. Let's start with transparency. So one of the exciting things about a blockchain is that it's a public ledger. We can actually see what's happening on the ledger. That transparency, that sunlight, if you will, into financial activity is actually, I think, very positive in many ways, especially if you can marry it with a degree of personal privacy, as many of these cryptocurrencies have. So you yourself can not worry about telling everyone how much money you have and what activities you're up to, but at the same time, you can verify things and audit them. And this is part of what law enforcement actually finds quite attractive, and why law enforcement has many positive things to say about crime committed on cryptocurrencies like Bitcoin. We often catch the bad guys who are using cryptocurrencies because of this transparency. The other thing that's exciting and risky at the same time, let's be clear, is the opportunity for people around the world with just a computing device and an internet connection to invest in early stage technology. This is something that historically you've had to be a high net worth individual in countries like the United States with $1 million plus net worth to be eligible to take that kind of risk. And now the regulators have done this to protect people, and sure, it is risky, but it also, as we look at the world today and companies staying private for longer and longer, and the outsized returns that private equity and venture investing have garnered, I think denying the small guy, if you will, access to those opportunities is creating more harm than good. So the ICO phenomenon, that was a very volatile and wild period in 2017, and I wouldn't necessarily recommend we go through frenetic, frenzied periods like that. But part of the reason it was so exciting is it was opening the doors to invest in early stage technology globally for the first time. And that was, I think, a pretty interesting and exciting opportunity. The job of people like me as researchers is to try to educate and inform people who are participating in this space so they understand the risks, understand the real data that's actually available to assess these different projects. But that's kind of neat. And then I think also the programmatic monetary policy is quite interesting of these currencies. The idea that the monetary policy, or supply schedule is transparent, it's visible. You know when new coins are being created. You can see that. You can see when they've moved. You know what percentage. I mean, like when you own gold today, you're guessing at what percent of the total gold supply you own. You have no idea. None of us have any idea how much gold there is out there. We know precisely how many Bitcoins are out there, and you know precisely what percent of the total you own. I think that's quite interesting from a transparency perspective as well.
Okay. The final, point I would like to dwell upon is the future, and in terms of not just the currency aspect of the technology, but also, in the area of tackling complex administration issues. Do you think distributor ledger technology can make a difference in, say, for example, land records? You think that can be utilized and it can create efficiencies over there? Because I can tell you the problem in India is that we have got here very small holdings of land,
Mm,
and 60% of our civil cases are property disputes.
mm, mm.
So in that context, if you look ahead, do you think this technology can completely transform complex administration issues like, for example, land records?
I absolutely. This is something that has already been attempted in a number of markets. We haven't seen what I would call a major success story yet around land registry and blockchain technology. But I think part of the idea is certainly giving people more clarity on property rights, what they themselves hold in a transparent way and in a way that can't be tampered with easily by um, you know paper getting lost. I mean, some of the benefits of going to blockchain are overlapping with just benefits of going paperless, right? Or just upgrading technology and having less kind of fiefdoms of property land registries around a country and having it more kind of aggregated and centralized. But there's other ways that I think the housing market or land property market could really benefit from the introduction of blockchain technology, and that's um, through the kind of the tokenization of property. Owning property is incredibly expensive. It's become a bigger and bigger investment for many people around the world, and it's become a real barrier, especially for young people in many countries, to own property because of the cost. And so one, I think, intriguing idea, and we've seen some work on this done in places like the UK and elsewhere, is the idea of tokenizing a property and being able to kind of attract investors in, say, the equity down payment. So you're not having to make the entire equity down payment, and investors are gaining some exposure in a tokenized form to a smaller percentage of a piece of real estate. So that's something that could be linked to kind of land registry systems on a blockchain, which I think could be quite exciting and could open up, even more home ownership.
Garrick Hileman, thank you so much for talking to us. It was a pleasure indeed.
Thank you.